Hello, everybody. This is Kara Bloomberg. I'm the Chief Operating Officer at LandrumHR. We have a tremendous amount to cover today, and I'm going to jump right in as quickly as we can. First, I want to make sure, if you're not already aware, and you live in Florida, that Governor DeSantis just ordered a stay-at-home order, except for essential services, just moments ago. It'll go into effect Thursday at midnight for 30 days. We're working diligently to get the information to our website on essential services. And please just continue to check back at LandrumHR.com. Certainly our HR partners and all of our team at LandrumHR will be available to start answering questions around that. But like I said, it just came out moments ago. So I'm going to focus on the CARES Act today, because I know we have a significant amount that we still need to talk about there. And again, more to come on the stay-at-home order for our Florida clients. Thanks for joining us. I appreciate you giving us an hour of your day. I know there's just so much going on for everyone. We're coming to you from our homes. It's really important to all of us here at LandrumHR that we continue to get these webinars out as quickly as we can, certainly once a week for all of our clients, for as long as we need to do them, to talk about all these legislative issues and to try and answer your questions. Again, LandrumHR.com, we have a resource page there. We're going to continue to add new information, updates, links, and certainly, you know our team. You have an HR partner. Reach out to us, ask questions. We're doing all that we can to get back to you as quickly as possible. There's a few items that relate to many of you that are on the call. So before we jump into the CARES Act, I just want to mention, I know that nothing is really business as usual right now for any of us, but a lot of you have probably been contacted if you have our health and ancillary benefits that May 1st is your insurance renewal. And we need to make contribution decisions so that we can open up open enrollment for your employees. A lot of what we'll talk about today includes with the SBA loan or other opportunities that you can choose, includes allocable health costs. So, if you can just continue to respond on the health and ancillary insurance for that May 1st effective date. Next, for those employees that are on our Slavic 401k plan, the CARES Act created some opportunities for employees to access distributions and loans that are related directly to COVID-19 issues. So you can go directly to the Slavic website at slavic401k.com for more information and to make those requests. You can certainly call our team if you have questions, but the best way for your employees to get the fastest information is to go directly to the Slavic website. We're working on an instructional video right now on the system enhancements that are related to all the changes that you're going to be needing to report to us. The video should be coming out soon. It's going to help guide you on how to report those items in our system. And then we know one of the things we're going to talk about today is the Paycheck protection loan. And if you decide to go that course and apply through the SBA for a Paycheck protection loan, we know that you're going to need some reports from us. So please contact your HR partner and we'll work on getting that information to you as quickly as we can. So you've got a questions pane on your control panel. Please feel free to submit a question. We'll try and get to as many of those as we can towards the end of the webinar. There's also a couple of handouts. The first is a white paper that you can download that are items related to the Families First Act. And we have a copy of the loan application that was released yesterday from the SBA related to the Paycheck protection loan that you'll be, again, hearing more about. And in our chat section, there's information available specifically on the loan application. It's a link that gives you more information about what you're going to need to provide. So let's get started. Johnathan Taylor, our Chief Financial Officer, and Amie Remington, our General Counsel, are here again with me today, our subject matter experts. I know many of you might know them personally, but just to give you a little background, Johnathan has been with LandrumHR for 15 years. He started his career in accounting with the IRS. and you spent a number of additional years in finance in the private sector. Amie has been our general counsel for 15 years through the course of her career at LandrumHR, but she has 20 years in the employment law arena, and she's a national speaker on employment law topics. So Amie, why don't you get us started?
Thanks, Kara. We're going to talk specifically today about the Coronavirus Aid, Relief, and Economic Security Act. Last week, we talked a bit about the Families First Coronavirus Response Act, and this is actually phase 3 of that. So by way of introduction, this was a bipartisan bill that was passed in Congress on March 27th, and it was the third of 3 phases. The first phase, you'll probably recall, was the Coronavirus Preparedness and Response and Supplemental Appropriations Act, which was House Bill 6074. It was passed on March 6th of this year, and it provided $8.3 billion to ensure coronavirus vaccines are available in the United States, that small businesses can qualify for SBA loans, and that Medicare recipients could consult using telemedicine. And then about 2 weeks after that, the phase 2 was passed, and that was March 18th. And that one was the Families First Coronavirus Response Act, which we did a webinar about twice last week. And that's House Bill 6201. And that one was $100 billion. And it expanded FMLA, the Family Medical Leave Act, and it provided for emergency sick leave pay. It also provided for free coronavirus testing and provided for certain requirements specifically aimed at protecting our healthcare workers. So this is phase 3. This is the Coronavirus Aid, Relief, and Economic Security Act, the CARES Act, which is also House Bill 758. It provides an additional $2.2 trillion, that's right, trillion with a T, $1 trillion of direct payments to taxpayers, and the expansion of unemployment benefits, and a newly created Paycheck Protection Act. So we're going to take a deep dive into all of these. In all, it was over 300 pages, this portion of the bill. And as I said, it provides $2 trillion in emergency assistance and healthcare response to individuals who are affected directly by the COVID pandemic. It includes the Paycheck Protection Program, which will be administered by the SBA, the Small Business Association or Administration. And in total, when we're talking about just the loan amount, that's $350 billion of loans that will be available to small businesses in the United States. So the big picture of the CARES Act is that it expands the existing Small Business Act through what's now called a new program called the Paycheck Protection Program. You'll hear people just say PPP or Paycheck Protection, and that's referring to the portion of the CARES Act that's a loan program. And what the Paycheck Protection Program does is it provides to American businesses short-term cash flow to small businesses to help them overcome the economic impacts of COVID-19. So basically, this means that any SBA certified lender will make loans to businesses who have fewer than 500 employees to assist those businesses with payroll and operating expenses, and some of the loans will even be forgiven. And what is not forgiven will have a very low interest rate and very favorable repayment terms. So the loans are provided by lenders that are certified by the SBA or lenders that are approved by the SBA administrator or the Secretary of the Treasury. And according to the information I've read, there appear to be thousands of qualified lenders. So the eligibility period of the Paycheck Protection Program, as Kara mentioned, the application is out so you can begin to look at what is required on the Paycheck Protection Program. If you're going to seek a loan, you can go ahead and start gathering documents and information to support your loan request. But the loan must be made prior to June 30th of this year. And so who is eligible? What businesses are eligible? Well, the Paycheck Protection Program eligible businesses include any small business concern that is currently defined by the Small Business Act. And that means any small business that has fewer than 500 employees or otherwise that meets the Small Business Act's size standards. Now, the business has to have been in operation as of February 15th, 2020, and the business has to have paid salaries or compensation and payroll taxes on or before February 15th, 2020. The businesses that are include corporations. It includes 501c3 nonprofit organizations. It includes 501c19 veterans organizations. It includes tribal business concerns who have fewer than 500 full and part-time combined employees. It also includes sole proprietors, independent contractors, people who are self-employed. Think about the gig economy that we've seen rise up over the past 5 or 10 years. So those self-employed people. If you're in the food service and the accommodation sector, which is NAICS 72, and if you know what that means, you might be in that sector, then the 500 employee rule is applied on a per location physical basis. So if each of your locations has fewer than 500 employees, you might be eligible for the loan. It also applies to independently owned franchises where there are 500 or fewer employees in that franchise. If you receive financial assistance from an approved small business investment company, then the normal affiliation rules don't apply. And then you need to note that divisions within a corporation likely don't count as separate businesses. Each entity is limited to one Paycheck protection loan, and each loan is registered under a separate tax ID number, and that's to prevent duplicates. So there's no duplication of loans. And one of the guidances that Kara mentioned was the U.S. Chamber of Commerce guideline, which is a super simple, easy to read summary of some of the things we're going to talk about. And so that would be a great place for any business owner to look for information. So once you've gotten a loan, if you qualify for it, what can you use it for? It does have limited purposes, but it's a very broad limit. So it can be used for anything that's otherwise currently allowed under the Small Business Act, Section 7A of the loan program. So if it's currently in the loan program as permissible use, it continues as permissible use. It can be used for payroll costs, and payroll cost is very broad. It includes all compensation for employees' wages or salaries. It also includes commissions. It includes payment of cash tips or vacations. It includes parental, family, or medical leave or sick leave. It can include severance and retirement benefits, and it can include any state or local payable taxes. It also includes costs related to group health benefits like insurance premiums, for example. It includes interest on mortgage obligations, or if you have a lease, it would include the rent or the lease payment. It includes utility payments that are necessary, gas, electric, things like that. And then finally, it includes interest on debts that were in existence prior to February 15th of this year. So if it's a new debt after that date, it won't be counted. But if it's an existing debt, so maybe you had a mortgage prior to that date, that would be counted. Now, there's 3 things that are not included. Compensation of an employee in excess of $100,000 of an annual salary will not be included. Compensation for employees whose principal place of residence is somewhere other than the United States, other than the continental United States, will not be included. And if you receive a credit under the Families First Coronavirus Response Act for sick and family leave wages, then it will not be included because that would be duplicative. So that's what's not included, but it's broadly intended to help employers with all of their outstanding obligations. Now, there's forgiveness of part of the loan. The loan forgiveness is available for expenditures made during the 8-week period beginning on the date of the loan origination. So that means if your loan is originated, say on May 1st, you would look 8 weeks after that at what your expenditures were, and the expenditures that meet the category that we just discussed, loan forgiveness might be available to those. So that the loan forgiveness that you could request include payroll costs, mortgage interest on real property, the rent, the utilities that we just spoke of. Loan forgiveness, you can ask for loan forgiveness on all of those things. Now, the amount of loan forgiveness can be reduced. The goal of the Paycheck Protection Program loan is to incentivize all businesses to retain employees and maintain their wages during this pandemic. So if you retain all of your employees, then the entirety of the loan can be forgiven. And you as a borrower will not be responsible for interest accrued during this 8-week covered period. So that's great news. Now, just yesterday, the U.S. Department of Treasury said that they anticipate a high number of loan requests. And so they said probably not more than 25% of the forgiveness amount will be for non-payroll costs. So they're going to forgive payroll expenses, those wages first, and then they'll look at the mortgage interest and the rent and existing debt obligations and things like that. So, but if you're looking at the payroll costs, what you want to do is you want to look at the amount that's currently eligible for forgiveness, and you want to multiply that by the average number of full-time employees per month that you retain during the 8 weeks following the loan. And then you want to divide that, and then you have two options. You can look at the period between February and June of last year, or you can look at the period of January to February of this year. And whichever number is more favorable to you, that's the number that you can use. It's the employer's election. Now, there's only one exception to that, and that's if you're an employer and you're considered seasonal as determined by the SBA, then you have to use the February 15th, 2019 to June 30th of 2019 period. But for all other employers, you can elect. You could do whichever of these two periods is most favorable to you when you're doing your math. Now, part of the payment can be deferred. And what that means is that if after forgiveness, if there's a principal amount remaining, principal payments, interest, fees, balances, that can be deferred for 6 months. Interest will accrue during this time, but all borrowers are qualified to apply, and all lenders must defer for 6 months. So if we're looking at the intent of this act, it is to encourage rehiring, it's to encourage paying people. There's a loan forgiveness and then a payment deferral. The government has provided so many ways to help employers continue to make sure their employees are paid. So how much can you get in terms of a loan? How much can you borrow? Well, the goal is to allow businesses to borrow up to 8 weeks of payroll expenses and any amounts for those other debt obligations that we spoke of. So what you would do is you would take your average monthly payroll cost and you'd figure out what 250% of that number is, and you can base this on a 12-month look back. So you could do an annual basis and figure out what your average monthly payroll cost in the past 12 months, multiply it by 250%. Now, the loan cannot exceed $10 million. That's the maximum. And just yesterday, we learned that the maximum interest rate from the U.S. Department of Treasury, they announced that the interest rate would be 0.5% and that the loan would mature in 2 years. So that's new information. It would be 0.5% and the loan would mature in 2 years. Now, there are a lot of terms of the loans that are really, really favorable terms. Well, one is there's no collateral. 2, there's no personal guarantee required. 3, there's no recourse against shareholders, members, or partners, unless, of course, your partner, your member, or your shareholder uses the funds for something that's unauthorized, and then you've got a whole different set of problems. But there's no recourse. There's no origination fee. There's no SBA guarantee fee. And there's no requirement that the employer be unable to access credit elsewhere outside of the SBA loan program. And that's a different parameter than in the normal SBA loan. In the normal SBA loan, a business has to show that it is unable to access other credit somewhere else. But here, it doesn't matter if you can access credit somewhere else. Here, even if you have credit somewhere else, you can still elect the SBA's favorable terms. And there are a lot of SBA lenders and other authorized lenders that the SBA administrator has approved. There's a lender match tool online on the SBA's website that you can figure out who the best lender is for you. Now, you are going to have to make a good faith certification and certify 3 things. You're going to have to say, 1, that the economic uncertainty of today's environment makes a loan necessary to support your existing operations. So basically, you have to be able to say, if I don't get this loan, I could potentially shut down. The next thing you have to do is you have to show that there's no other application pending for a duplicate loan. So in other words, there's no double dipping. If you're going to get a loan for these wages, you only get this one time. And then you have to be able to say that from February 15th to December 31st, you won't seek a duplicate loan. And again, that's the double dipping parameter. Now, if you've taken out an economic injury and disaster loan because of COVID-19, before this PPP became available, you can refinance that into the PPP for loan forgiveness purposes. So the government has really done everything possible to try to make it as easy as possible to roll the economic injury disaster loan into the PPP and apply forgiveness for both. But you can't take out two loans for the same purpose. Now, you can take out a state bridge loan. That is something that the U.S. Senate Committee on Small Business and Entrepreneurship put out the other day in their economic summary, was that you can take out a state bridge loan, but there are going to be different terms to that loan than to the PPP loan. Now, with respect to unemployment insurance benefits, state unemployment insurance benefits are available as prescribed by the states. In the states, many of the states have broadened their applicability, have become more generous in light of COVID, or have changed their standards. So you're going to have to look at your individual state. There's a pandemic unemployment assistance, which is a new federal benefit. It's called the Federal Pandemic Unemployment Compensation. And that, in addition to what the state provides $600 a week in federal benefits. So a person can receive their state benefit and in tandem can receive their $600 federal benefit at the same time. There's also a federal pandemic emergency unemployment compensation, which is an additional 13 weeks that may be provided through December 31st of this year for anybody who remains unemployed and has no more state benefits if their state benefits run out. So the way that the unemployment payments will be made depends on what state the employee is located in. The employment, if the state has reached an agreement with the federal government, it's possible that the person could apply once and receive both in one payment. But if that's not the case, then it's possible that they'll receive two separate payments that run in tandem, but one would be from the state and one from the federal government. Now, what we are currently reading, and I believe to be the truth today, is that this will not negatively affect the employer's state unemployment rate. So, for example, if you're in Florida and you have a very low rate of 0.7%, it's not going to jump to a 5.4, which is the highest rate because of this pandemic. That is what I'm understanding now. And of course, we have upcoming regulations. We're watching the IRS. We're watching the Department of Labor. As I mentioned earlier, the Secretary of Treasury issued new guidelines just yesterday. So we are keeping on top of all of this, and we're also working very hard to provide lots of resources for our clients to better understand what their choices are. Now, with respect to choices, Johnathan Taylor, our CFO, is going to provide some real-world examples of choices that you can make that might apply to your businesses. So, Johnathan?
Thank you, Amie, and welcome to everyone. Thank you for joining us today. As Amie said, I am going to review some of the options that are available to employers, and then we're going to look at some examples in applying those options. So first, just a review, again, of what some of the options that are out there for employers. And the first one I want to talk about is the tax credit for sick pay. And this is for employers with 500 or fewer employees. It is for payments made April 1 through December 31, 2020. And it is to reimburse employers who are required to pay their employee sick pay and can include health costs that are allocated to those payments. And the credit is claimed through payroll taxes. The second credit I wanted to talk about is the expanded FMLA. It is similar to the sick pay credit that we just talked about. And so paid FMLA can be up to 10 weeks. And if the employer is required to make these payments, they are entitled to a credit for the full amount paid. This credit can also include some health costs, and the credit also is claimed through payroll taxes. Now, LandrumHR PEO clients are considered the employer entitled to these credits. LandrumHR is paying and reporting the payroll taxes, which is where these credits are going to be claimed. Our processes will ensure that the clients receive the benefit of the credit. Now, both of these credits we've talked about are part of the Families First Coronavirus Response Act, which became law on March 18th. The next items we are going to review are part of the Coronavirus Aid, Relief, and Economic Security Act, the CARES Act, which became law on March 27th. Some are referred to both of these laws as the Attorney and CPA Economic Relief Acts due to all the legal and tax elements that are in them. Of course, I'm only joking about that, and since I'm a CPA and Amie's an attorney, I guess that gives me leeway to make attorney jokes. So the third option I want to talk about is from the CARES Act, and it is the Paycheck Protection Program. And Amie talked some details about this a minute ago, but just in review, this is a loan for employers with 500 or fewer employees. Certain hospitality businesses can count their employees by location as opposed to counting all of their employees and determining the 500. And the loan can be the lower of 250% of monthly average payroll or $10 million. It is for the period February 15 through June 30th, 2020, and it has forgiveness provision for qualified expenses that are paid during that period. The next option is to delay employer payroll taxes. And the employer can elect to delay payment of the employer share of FICA taxes during 2020. And so those taxes that would normally be due throughout the year will be due. 50%, half of them would become due by December 31st, 2021. And the other half, the other 50%, would be due by December 31, 2022. And so in a way, this is a loan from the federal government because the money that you would be paying to the government throughout the year, they're allowing the employer to keep that. And then it will be due, as I said, in 21 and 22. And so in a way, they're loaning money through the payroll tax process. So it is available to employers and encourages them to keep paying their employees during 2020. So the more that you pay, the more payroll taxes you'll have, and so the bigger the deferment that you will have. The last option that we wanted to review is some examples. Before we talk about examples, is the employee retention tax credit. And this is for employers whose business has been partially or fully suspended under government orders or had a 50% decline in gross receipts. There is a differentiation between employers with 100 employees and those with less than 100 employees and those greater than 100 employees. And that has to do with which employees you can take the credit for. But the credit is 50% of the qualified wages that are paid March 28th through December 2020. Now, the maximum credit is $5,000 per employee. And again, the credit is taken through employer portion of FICA taxes. And So one thing I want to say about all of these options is that there is no double dipping. If you use the loan, then you cannot also take these other credit options, tax credit options. You can have employees that you are required to pay sick leave or FMLA pay to. You can use the credits for those payments that you are having to, and then also take a loan for the payment to your other employees. So there can be some mixture. It's just that you cannot use it both ways. The other way of not double dipping is any amounts that you pay and claim a credit for, you cannot also claim a deduction for. So let's look at some examples. So example one is Joe's muffler shop. So he has 8 employees, and his business has slowed, and he told 6 of his mechanics not to come in on March the 20th. The mechanics they've been using their PTO, their paid time off that he allows for them since then. He also, Joe's bookkeeper, Susie, she cannot work or telework and is at home taking care of her daughter for the last 2 weeks. And the school closed due to COVID-19. So what are the options for Joe and his employees? First, for Susie, Susie can claim sick pay effective April 1, along with 10 additional weeks of extended FMLA, and Joe can claim a payroll tax credit for the amounts that he pays her. Now, if he were to lay her off, and he would not be required to pay her and therefore would not be entitled to the credit. For all of his other employees, Joe he can apply for the SBA Paycheck Protection Loan. And he can use that money to pay his employees, rent, and some other specific expenses for up to 8 weeks. And those amounts can be forgiven. So he borrows the money, and then he gets forgiveness for the amounts that he uses for these specific qualified expenses. Or Joe can continue to pay his employees and delay paying all employer share of FICA taxes for the rest of this year, for 2020. Now, those taxes would come due, half of them at the end of 2021, and the other half by the end of 2022. Joe also has another option, and that would be that if he lays off all of his employees, those employees can file for unemployment, and they will be entitled to normal unemployment plus the $600 a week. Or Joe can continue to pay his employees and receive a 50% credit for the wages paid to the employees if the gross receipts are 50%, if his gross receipts are 50% less as compared to the same quarter in 2019. So if he would have to prove that he had a dip in revenue of 50% to be able to claim this credit. And the credit is claimed through employer share of payroll taxes. Now, Joe may also be able to qualify for this if his business is considered non-essential, as we talked about at the beginning of this, and the governor shuts him down, that would also qualify him for this credit. So let's look at the next example. This is Upstate Credit Union, and they have 60 employees. And right now, 30 of their employees are working full-time operating the drive-thru. The other 30 employees have been using their PTO, their paid time off, for the past 2 weeks. None of the employees have been diagnosed with COVID-19 or are taking care of someone related to COVID-19. One teller has been on FMLA for 6 weeks related to maternity. Upstate, they have some great employees, and they want to keep all of those employees, and they want them to return when the credit union is in full operation. So, what are their options? So currently, none of their employees are eligible for the sick pay or the extended FMLA. None of them have the requirements for either of that. The one employee that has been on FMLA, she will continue on FMLA if that's what she opts for, but that she is not entitled, that does not entitle her to the sick pay or the extended FMLA pay. For all of their other employees, Upstate can apply for an SBA Paycheck Protection Program loan. They can pay their employees, they pay their rent and their other specific expenses for 8 weeks, and those loan amounts can be forgiven. Or they can continue to pay employees and delay paying all employer share of FICA taxes for 2020. And then again, they would owe those amounts back by the end of 2021, and the other half at the end of 2022. Or for the 30 employees that have been laid off and are not working, those employees can file for unemployment, and they will be entitled to the normal unemployment plus $600 a week. Now, for an employer like Upstate that that has good employees, they don't want to lose them, they don't want them, and they want them to come back. If they allow them to select unemployment, it may be that they're more likely to go and find other options and other employment. And so I just think that's an element that all employers should consider as they're thinking about their different options, that if they just let them go and get unemployment, then good employees may go find something better. So they have one other option, and that is to continue to pay their employees and receive a 50% credit of wages. But that they would only qualify for that if their gross receipts are 50% or less. In this certain situation, since the credit union is operating their drive-thrus, I don't know that they would have that drastic of a change in gross receipts. So in this example, Upstate would probably not qualify for this credit. So example number 3. This is Dana Dental. And Dana, she has 25 employees. And like a lot of businesses, business was good for January and February, and even the first part of March. Things were going well. And then on March the 20th, it was determined that all dental procedures that are not considered as an emergency were stopped. So Dana, on April the 1, has closed her office, and she is referring all emergencies to another practice. So what are her options? So none of her employees are eligible for the sick pay or extended FMLA. But Dana she can apply for the SBA Paycheck Protection Loan, and she would pay her employees, she would pay her rent, some other specific expenses for 8 weeks, and those loan amounts could be forgiven. Or she could continue to pay all of her employees and delay paying all employer share of FICA taxes for the remaining of 2020. And then half of those would be due at the end of 2021, half at the end of 2022. Again, delaying payment of their employer share of FICA taxes. Or she could lay off the employees and let them file for unemployment. And again, though, these are good employees. She's got some great hygienists, built relationships with all of her clients, and she wants them to return and come back with her as soon as this thing is over, and her clients come back, then she would want to consider that before she would take this option, because they may end up in another dentist office. Dana also has the option to continue to pay employees and receive a 50% credit of wages paid to employees because of government suspension or operation. And so she has been shut down, and so she does have this option. And again, the credit is claimed through employer share of payroll taxes. And the last example number 4, is Leviathan Enterprises. They have 777 employees, and the company is operating, but 100 employees were sent home 2 weeks ago due to business slowdown. They have 5 employees that have requested sick leave and extended FMLA because they are home taking care of children affected by COVID-19 and do not have other child care options. So how does that affect Leviathan? Well, none of their employees are eligible for sick pay or extended FMLA, and that is because they have greater than 500 employees. Now, they had 777. They've laid off 100. They're at 677. That still is above the 500. So they're not required to make the sick pay or extended FMLA payments, and they are not entitled to the related credits. Now, they can continue to pay the 100 employees and delay paying all the FICA, paying all the employer share of FICA taxes for 2020. Those payments would be due at the end of 2021 and the end of 2022 for the other half. Or they could lay off their employees and allow them to file for unemployment. Employees would be entitled to normal unemployment plus the $600 a week. Or they could continue to pay their 100 employees and receive 50% credit of wages paid, and the maximum on that is $5,000 per employee. And that would be if they had a reduction in 50% of their gross receipts. Since they're still operating with only 100 down, probably this credit would not apply to them. Now, Leviathan Enterprises is not eligible for a Paycheck protection loan, and that is because, again, they have more than 500 employees. Okay, I'm going to turn this back over to Carol.
Thanks, Johnathan. We've got just a lot of great questions coming in. I'm going to try and get to as many of those as we can today. I want to take a second. We have so many clients on the webinar and variety of size and industry, and wanted to just get your feelings on how today your business is being financially impacted by COVID-19. Just opened up a poll for you to respond. Yes, significantly. Yes, somewhat. Not sure yet. Or no, not yet. So give you just a couple of minutes there to respond, and certainly with the information coming out today from Governor DeSantis, that twists a whole new element on business as we'll know it for the next 30 days. Again, if you were late joining, we did receive word just as we were getting on about the stay-at-home order for Florida. So if you're a Florida client, we'll have more information around essential services posted on our website. Going to get the HR partners. I know they're scrambling right now to get as much information as they can for the calls that are coming in. So close the poll here. Appreciate those of you that responded. And it looks like we had 51% of our attendees say yes, significant impact, 29% yes, somewhat, 14% that's not sure yet, and 6% no, not yet. So Certainly we can understand there are no industries or organizations probably that haven't been affected in some way. And we just want to keep on top of evolving legislation so all of you can be prepared to hit the ground running when things turn around. The majority of you that are on the webinar today are clients of our PEO. We do have all types of HR services that we provide at LandrumHR. If you are in a situation where you're considering a layoff for your employees, we have outplacement services for those employees that we can help. So just contact us if you have questions around that. Our consulting division, HRQ, can provide consulting around decisions you need to make on reducing expenses, and really just also help you prepare for the rebound that we know our clients and the entire country is going to have in a few months. So if you guys are ready, Johnathan and Amie, we'll get moving with questions here for about the last 10 minutes or so. Try to categorize these a little bit if I can for you, but there's a lot of them. So first question has to do with being self-employed and eligibility for the PPP loan.
Kara, this is Amie. I can take that one.
All right.
If you are self-employed, if you're an independent contractor, if you're part of the gig economy, and you can show evidence of tax payments in the past, whether as a sole proprietor, an independent contractor, then you are eligible for a PPP loan.
Okay, and we'll keep that going on the PPP loans. Just a ton of questions there. Can an employer use a PPP loan to pay 1099 employees?
There's a specific provision that says that independent contractors may have a PPP loan. So if I'm your independent contractor, I can file for my own PPP loan. But I have not seen anything that says that an employer can claim an independent contractor, because after all, that's not an employee. And if the independent contractor got a PPP loan and then the employer business got a PPP loan based on that independent contractor's work, that would be $2 going out instead of $1, if that makes sense. One to the business and one to the individual, the independent contractor. So all of the information I have seen shows that the independent contractor can file for his or her own PPP loan, but an employer can only file on behalf of employee wages.
Questions around the LandrumHR relationship with our clients. So first is, how does the LandrumHR relationship impact the determination of the size of each person's business? You want to clarify that?
Sure.
Yeah,
so just
that, Amie. Or go ahead.
Go ahead, Johnathan. Either one. I think I think we would get the same answer, right?
I hope that we would. And so the determination is made at the client level, not at the LandrumHR level.
And I had a question around a business that's owned by a parent company and wanting to understand a little bit more about how common ownership goes into that equation for the 500 employees.
So,
Johnathan, you want to take that?
I will take that. You have to look at some common control, and there's several different things that are considered in that. And if you do, you have to consider them all of your employees. They all have to be considered in counting the 500. Now, as Amie mentioned, there are some specifics in the law that if you have an NAICS code that starts with 72, which is primarily hospitality and hotels, it is by location. And so do you have 500 or less or 500 or more employees at each location, and you do not have to combine them. Amie, you want to add anything to that?
No, I think the important thing is this tracks the standard Family and Medical Leave Act law, where there was a specific colloquy in the Senate that clarified that PEO clients stand on their own for purposes of counting employees for any federal law.
Okay, and then a specific question around payroll records and taxes. So if how's the Treasury going to distinguish between LandrumHR and the clients when their payroll records and taxes come from LandrumHR? How will the employer document their 250%?
LandrumHR is going to be working with our clients to provide the data that they need for these loans. As Kara mentioned at the beginning, we're at the beginning of this webinar that we're working internally to make sure that we have resources available to help our clients apply for these loans and get all the data that they need for that application.
So for those of you, anyone that's been following the information from the SBA, as late as yesterday afternoon, we were told that we would be receiving more information about the application on Friday, and then an hour later, the application was out. So we've been working hard to review the instructions on what's going to need to be submitted with the application. Someone asked, if I call my HR partner, will they know what I need? And there is general requirements of what's going to be needed for every application, and we are working to put that into a package. So if you are interested in applying for the loan, if you want to reach out to your HR partner, and we should be able to have a general list of the items that we know you need from us. So Johnathan, Amie, whoever wants to take this one. Questions around the employees that are making $100,000 or more. Are those employees completely excluded their pay, or is it you're only covering their payroll for up to $100,000?
It is only for their payroll up to $100,000. It's okay. Not that
so that's the cap.
Completely excluded. Right. Correct.
Amie, you mentioned about the economic disaster loan. I think we've had a few clients that may have already been in the process of applying for those loans. Can you go back to that and just clarify? Maybe they've applied and they haven't received notification yet. Should they turn around and go ahead and apply for the PPP loan also, and that'll get sorted out, or what's your recommendation there? Again, we want them to all talk to their CPA and attorneys, but what are you hearing about that?
Well, what I'm hearing is that you will not be penalized for taking out an economic injury disaster loan, because that was available before the PPP loan forgiveness program. So I'm hearing that you're not going to be penalized from that. So if you're getting the first loan and it's not as favorable as the PPP loan, then it might be a good idea to talk to your CPA and see if you could get the PPP loan and then fold them together for loan forgiveness purposes.
Okay. Good. So I think we'll probably get a lot more questions around that. It seems like we've had a number of clients that have already started to take that route. Question around part-time employees. We have a client that does not typically reimburse their part-time employees for sick pay. They don't have a sick pay provision for part-time, but wanted to ask, I'm assuming going back to the Families First Act, if one of those employees has a reason to claim the sick pay or the extended FMLA and they're part-time, will how will those part-time people be eligible even though the employer didn't traditionally pay sick pay for those employees?
So if I understand the question, let me answer it in two parts. First of all, when we look at the Families First Act, it's really, in my mind, I have to segregate it into weeks 1 and 2, which is the emergency sick leave, and then weeks 3 through 12, which is the expanded FMLA. And so it doesn't really matter what the employer's policy is per se, except that with the first 2 weeks, if they have a policy, an employee can use existing FMLA. But even if they don't have a policy, if the employee otherwise qualifies, like if they are subject to a federal, state, or local quarantine order, if they're a person caring for somebody who's subject to such an order, if they're an employee who's caring for a son or daughter where the place of employment is closed or their place of care has closed, if they're otherwise qualified, then they're going to be able to receive leave under this. Now, when you look at the expanded FMLA, if they are, there is a way to calculate full-time versus part-time. So, for example, under the first 2 weeks, if somebody is full-time, then they would get up to 80 hours. If somebody is part-time, then you would use a look-back period to determine what the pro rata amount of hours that they would be entitled to are.
Amie, I think is some of that addressed in the white paper in the handout, or if not, I think we have some resources too on the website that gets more specific into full versus part-time for that client that's looking for that information.
Yes, and there is a cap on what the employee is to be paid, whether they're using full-time or part-time, and whether they're using regular rate of pay or the 2/3 rate of pay, depending on the reason for leave. There is still a cap on the amount of payment that's allowed.
Okay, we've got a number of questions around specifics of what's going to qualify for the money to be utilized under the PPP loan. So I'll start with an employer's making contributions to an employee's retirement plan, to the employee's portion of the health insurance. Are those going to be covered costs that employer can use that PPP money to continue to do those things?
As I understand it now, payroll cost is defined broadly, and it's defined to include it uses the words retirement benefits. So I think it would be covered, but certainly you would want to work with your CPA to see what kind of retirement benefits you have, what that looks like, and if it meets the qualifications of the PPP. But it does use the word retirement benefits in the definition of payroll costs.
Okay, great. We have a number of questions around workers' comp, and I think particularly with the news that just came out, and we're going to have even more employees that are at home. So I don't know that we have those answers right now on how workers' comp premiums and how will employees be treated from a workers' comp perspective. But a lot of questions around that, Johnathan and Amie, if you want to expand on anything you're hearing, or we can certainly make sure that gets addressed shortly through our website.
Yes, so we all have a lot of, go ahead, Amie, go ahead.
No, you answer. You go ahead.
we all have a lot of employees, a lot more employees working remotely than we ever have. And there are some particular safety issues and workers' comp related issues about those working from home. As an employer, you want to make sure that they have a safe environment to work in. And there are details coming out about this. So yeah, I think that we will be sharing resources related to that. Amie,
yeah, and
you want to say anything more specific?
Yeah, and Amie, even more deeper, I think with if a business is shut down and the employees may not even be working at home, how do workers' comp premiums, does that, continue? So I think we just need to focus on that area of getting some more responses up on our website. Anything else, Amie, you want to add to that?
No, I think that's a great question, though.
Yeah. So we are 1 minute away from wrapping up. I think, Johnathan, you had a couple of closing thoughts for everyone.
Yes, thank you, Kara. Just as she said, a couple of thoughts. One is that information is changing rapidly. These laws were passed within days, and usually that process with our government takes years. And so you need to work with your advisors. A lot of what we've given today is a high-level overview, and there are a lot of details in this law. So you need to be working with your trusted advisors, your CPAs, your attorneys, those, and make sure that as you're making these choices, you're getting some counsel from them. So just following the tenet of the law is important, and because as we've said, there's updates coming out continually. Since I've been on this webinar, I've seen emails pop up, updates, and so it is just continually being updated. So, but the intent of the law is to take care of your employees, and employers that are affected by this COVID-19 pandemic. That is the general intent of the law. The next one is just to deal with the now, but take time to consider your rebound strategy. So we want to stay healthy. We want to take care of our family. We want to get our employees taken care of. We want to pay our bills. We want to take advantage of all these government options that we can. But this will pass. Business will return. Think about it and be prepared.
Johnathan, I want to mention, just the number of questions that came through, and I'm sorry that we didn't get to all of them and answer specifically. We want to be able to focus on what your specific questions are, what your needs are in your situation. So please, we'll disseminate these questions through the HR partners. We'll certainly make sure that they're available to talk to you about your specific situations. We really appreciate you so much taking this time with us. Sorry, we went a minute over. As we continue to get more information, we'll continue to do these webinars and just trying to find the best ways that we can get the information out to you as quickly as possible. Amie, Johnathan, thanks so much. I know the whole team is just working tremendous hours trying to disseminate all of this and get information to clients and really help all of our clients make the best decisions that they can. We're going to send the recording out for everybody that registered, and just thanks everyone for joining us today, and don't hesitate to reach out to us. Thanks.